I'd like to start with a bit of audience participation. I'd like you to put your hand up if, and there are three parts to this. Firstly, you know where your pension is being run, so you know who runs it. Secondly, you know what they're investing in on your behalf. And then thirdly, you know how they used your votes at the AGMs of the companies that you own. Could you put your hands up, please? Okay, there's a few hands. I can see through the lights. That's great. But now look around you for a second. Now, we are all here because we're trying to harness the collective intelligence of the system, right? Of all of us as individuals. And yet what I'm trying to demonstrate with this question is how few of us have thought about the impact of our own money, our own pension savings and investments. And I have two main points for you. Firstly, capitalism is failing. And secondly, it is only when capitalism is corrected that we will actually get the Sustainable Development Goals scored. At the moment, they are 17 market failures, or rather 16 and one around collaboration. If the market was structured properly and externalities weren't external to the company's cash flows, the valuation work that we do and the capital that we then put to work would be financing automatically the delivery of the Sustainable Development Goals. So the first main claim I'm making is capitalism is broken. It's not asking you as individuals what you're concerned about ethically. It's not really supporting corporate practices on sustainability and rewarding those companies that do this stuff well with a lower cost of capital. And it's also ignoring the one planet boundary condition, as some of us call it. That fact that we only have one planet's worth of resources to finance the economic growth. Now, why do we care about this as Aviva? Well, we know that it can be done. We know that the Sustainable Development Goals are possible. But we also know that they're an enormous challenge. Some of the estimates of the financial costs of delivering the SDGs by 2030 is a cumulative $70 trillion. $70 trillion. And just to help you picture that, if it was seconds, 1 million seconds is 12 days, 1 billion seconds is 31 years, and 1 trillion seconds is the year 33,707. And we need 70 of those. Okay? I know I'm using seconds and time, but I'm trying to make a point, which is the human mind finds it quite hard to picture just how big the scale of that challenge is. Yet, it is only a third, roughly, of the stock of manageable assets that we currently have created. When Aviva was created in 1696, the world's economy was 800 times smaller, not 800%, 800 times smaller. World population was about 400 million. Now, the growth that we've seen since then has been stratospheric. So as I'm arguing that capitalism is failing, and one of the reasons why it's failing is that the capitalists, all of us, all of you, and we run money for 19 million people in the UK, people aren't taught at school how the system works. Citizenship courses teach you a bit about politics, they teach about climate change, they teach about inequality, all sorts of issues. But our children, and in fact, most of our policymakers and politicians, are not taught how capitalism works, how your money flows through pension trustees to end up in fund managers who then buy and sell companies listed on a stock exchange that were brought to the market by an investment bank, and then the companies that list or that put debt on the market, your money then ends up in them. But hardly anybody is aware of how that system is structured. And I find that utterly absurd. There are literally tens of millions of people who are the capitalists who have a conscience, but they aren't aware of how their money is shaping their world. Yet a moment's consideration, your food, your furniture, your transport, your holiday, all of that is delivered with capital markets. But as I'm saying, they ignore your personal ethics. It ignores the company and your sustainability work. You're not properly rewarded with a lower cost of capital for it. And it ignores that one planet boundary condition in all the valuation work that it does. Yet we allow it to continue because hardly anyone understands it. Now, we have a different vision, as you could expect. I wasn't just going to stand up here and depress you all, but there has been a quiet revolution in the last 2 decades, and many of you are part of that revolution, in the corporate disclosure world. As a fund manager, we now benefit from thousands of companies now publishing tens of thousands of data points, and Bloomberg, which is a system used by pretty much every fund manager and analyst, will routinely capture that data and give it to us as fund managers to allow us to rank companies in this space. There's now a cottage industry of the MSCIs, the Vigeo Iris, the Sustainalytics, corporate nights. There are loads of institutions that now exist to rank companies, and they privately sell us the comparison of how Exxon does against Chevron, against BP, against Statoil, or it's called something Equinor now. Anyway, these existing institutions, unfortunately, use a methodology that you aren't probably familiar with because it's a private good. They issue data that you can't see without paying for it. And the methodology wasn't sourced, wasn't created by the wisdom of the crowds. So the irony is that the institutions that rank corporate transparency are themselves not very transparent. And as a consequence, the 19 million people whose money we run in the UK, we'd love to be able to give them a sense of how their money is shaping their world, but we can't give them the data. So our vision a few years ago was to create something that now exists called the World Benchmarking Alliance. It is a partnership now with the Index Initiative in Amsterdam and the UN Foundation. It won an award from the UN last year. Aviva, in fact, won the corporate award for the Sustainable Company of the Year by the UN, which was a privilege to go to. But what we're trying to do is to build free public league tables ranking companies sector by sector on how they are impacting on the Sustainable Development Goal. That's not how does the issue hit the company's cash flows, that's how does the company hit the issue. Some of you might be aware of the Corporate Human Rights Benchmark, took as its basis the UN Guiding Principles on Business and Human Rights, something that I chair. We built that as proof of concept. We now rank the apparel, extractive, and agricultural sectors, the listed companies, on how they're delivering the Ruggie framework on business and human rights. We're going to be doing that now with climate change. We're going to be doing it on gender, on the transition on food, on fisheries, and on many other issues. We've just finished a consultation where over 10,000 people responded from over 100 countries, actually, which we were quite proud of, and crowdsourcing the best thinking from individuals and institutions about what sectors and what issues we should be targeting. And those were the conclusions that we drew. So the World Benchmarking Alliance, as it's a free public good, needs to be funded. Aviva is putting in a significant seven-figure sum each year for the next few years to help back it. We've also got a similar amount of funding from the British, the Dutch, and the Danish governments. So the institution now exists and is funded and is going about the job of building these benchmarks. So what I'd like to imagine is that next time when we're doing one of these crowd conversations and I ask how many of you are aware of where your money is, who's running it, how's it shaping your world, and how are your votes used, you'll all be able to say, yes, you all know, and you'll have been able to see in your smartphone, A, your portfolio, B, your votes, and then see how everything you own ranks against these benchmarks, against these measures. And ideally, I'd love you to be able to, for example, imagine a future where you can walk into McDonald's, which is a listed business, your smartphone knows you're there, it vibrates, tells you, by the way, you own this business as well through your pension. You might want to tweet that you're concerned about its approach to human rights. It actually doesn't score that well. And you tweet the investor relations team as an individual owner. You also tweet the comms team. So this revolution is the next loud revolution that will build on the silent revolution that I've already referred to. And I'm going to give you a minute back of this conference. Thank you very much indeed for listening.